Hi everyone, this is Anne-Marie Band. Today is Monday, December the 30th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Yes, I am in Switzerland. We'll be back in the States on Thursday, Monday, and Tuesday. I will do a video. Wednesday and Thursday, I'll be out of pocket, and then Friday, we'll be back up. Today, we are doing a midday Moneyball report because I see a number of things that look pretty interesting. So I'm looking forward to connecting with folks on the Benzinga Pro platform for that. We just had a little bit of a dip in the market space, but we're using the monthly charts today simply because the weekly ones are looking a little wonky for some reason on TrendSpider, but it is getting close to the end of the month, and so this helps us a fair bit. Now, here's where we stand. Above 59.18, we find that we've got a fair bit of buying pressure. Notice we've got a high here from 4 months ago. That's 58.30, and it looks like we came within 10 points of that and began to bounce. So what is the storyboard there? Dips are still buy zones into the end of the year, but we are getting a little long in the tooth from a momentum perspective. And so once we start losing these edges, it's better that we step back and say, all right, can we hold these market edges? So what are we looking at? Essentially a retrace of last month. We've got support all the way down at 57.24, something like that. So those deep dips could give us buy zones. But if we bounce in the next little bit and we cannot get up over that 60.51, we really do have ourselves a good shot at a shorting formation into higher support. Remember, the trend is still upside. And so if you're looking for value to hold, you want to wait for a dip that will help you manage your risk better. And that dip could be fairly significant. We can see these numbers all the way down into the heavy congestion zone at around 55.85. And then, we've got 53, 53.27, 53.40, something like that could give us our next edge. All right. For the time being, dips are still buys as long as we hold 59.18. Now, we are up here at 59.70, and so if we decide to take a long, excuse me, we will see, whoa, sorry about that. We will see that there's a fair bit of risk, so you want to be pretty careful here, and we'll look at the hourly in just a quick second. Let's take a look at SPY on this same monthly. We're going to see same kind of inside candlestick, same kind of dip buying mode, 59.84 on the support zone. You wait for it to test it and then recover. Otherwise, if we bounce to 602.80 and we cannot hold it, we've got ourselves a very cheap short. We're walking the Keltner band. That's this right here. And so notice the Keltner band has upward slope. The trend of our moving average has upward slope, so it's a dip buying formation. Do not short these lows unless you figured out specifically what your strategy is about managing risk. Okay, let's go back to the ES, and now let's take a look at the daily. All right, now we know Monday's video is always a little bit longer, and it's because there's so much to look at, because the end of the week matters and the end of the month matters. And so as we slip into the day, however, what we can see is this nasty patch here. Notice this topping formation collapses sharply, completely recovers, and now we're doing it again. As mentioned, if you've read any of my tweets or listened to me beforehand, we've got ourselves an area that is a very sideways slush. There are a lot of people that are, hey, this is very bullish, things are going to go great, and a lot of people going, hey, the sky's falling. When we've got a cross current like that, we know that what we actually have is sideways formations at very big time frames. This happens because the positions are not in alignment with each other. People are trading on both sides of the upward highs and new highs to downward lows and lower lows. And so that really does end up giving us sideways pressure. Now, what do? Well, we just lost Friday's low. And we're trying to hold it. Notice, buyers are coming in here. If you could see level 2 or time in sales, you're going to see them trying to come in. Do you want to take a long here? Potentially you do, but your stop needs to be no more than 5 or 6 points max, because if we lose it, we are headed to the top of this value area high, and that number is around 58.82. Because we have a high that couldn't hold, and that gave us a lower high and a lower low, and now we have another lower high and a lower low. My thought is bounce actions, going to be sell zones. I'm going to like that bounce action area around 60.51 to 60.71. That's the line that I'll be looking at today to initiate a very nice short that should give us what we want. We have split momentum. We have negative divergence. This is very high. This is lower than this one, but we hit the same price. So we've got ourselves rotation to the downside. In my mind, bounces are going to give us sell zones. Again, buyers are going to defend at this 59.70 area. So let's see how well they do on the push up. We do know that inventory in the pre-market is negative. Let's go to the Qs. The Qs are in full breakout zone, right? Again, pullbacks or buy zones. What's the ideal number? Well, if you've been listening to me last week, you know I said, hey, listen, if we lose 779, we're going to head down to 519, and then we're going to go likely to 328, right? And so this is why I chose that number. 328 is the wick of last month. We faded down into that zone. I would not be surprised to see a bounce that fails here. Now, here's the thing. A bounce might hold here. So what do we want to look for? We want to look for how well a pullback into 21,350 holds. Do you want to buy it straight away? Well, let's look at that daily. Okay, and what the daily shows us, wow, do I have a lot of Fibonacci sitting in here? Okay, let's delete this big one. We'll leave the little one. It's just taking the range from this wave of the high to the low. That's what it's showing us. And we can see the topping formation with negative divergence and high, lower high, lower high, low, lower low, lower low. But you can see where that support zone is sitting, and it's sitting right at that 422 area. If we do lose it, you know, maybe we lose that 350 zone and we head back into 250, right? Are they going to try and buy here? Yes. Is this a cheap long? Yes. But you're against the trend. We're underneath the hull. And we just tested that midline area that shows us that buyers are going to try and come in. I'll be looking, if you want to take this long, not a bad one, you just don't want to lose 422. Okay, right now we're at 489. That's pretty far. That's pretty far away. My thought is bounce into the VWAP should give us a nice short, but we should have some inventory correction at the open, simply because inventory is very negative. Traders are going to want to cover, take their profit, and that's going to send us into the resistance zone. So I really like the 779 area to short. It's showing us that 750 to 740 might be the better number. Take it as you will. We know that these things are not exact. They simply are not. All right, let's take a look at the corresponding Qs. Let's go to the monthly. We can see again, nice breakout. As long as we hold this 515 and some change, 515.58 or so, price action is going to give us more upside. Do we see selling wicks like we do in the others? Yes. Momentum is very high, so dips continue to be buy zones, but we could dip a bit lower. There's a lot of heavy congestion here, all the way down to 487, and then potentially even 479 to 478 and some change. They could try to shake out the weak hands there, and you never know with the market. All right, something very, very interesting to watch. If we take a look at the daily, got these Fibonacci's last major wave. It came very close to the 150. So it's in the middle of the Skeltner band. Old resistance, new support. Notice the broken support that quickly recovers. We've got the same sort of thing, but on the daily formation, much stronger, right? Big selling candlestick on Friday, but holding the lows. So this 515.60 area going to be very key. You're going to see traders really battle at that area. If we break above and beyond 525, we've got this upper edge of congestion at 532 in a potentially sideways and landlocked space. Let's go to the daily. And you can see here's a high, here's a lower high, here's a low. Now we have a higher low. Old resistance, new support. Could it break? Yes. The deep areas of support, liquidity looks like 505. That's going to be where the buyers will come in. Big selling candlesticks in the last couple of days, but that savage bounce, folks. If as long as we hold that 515, we've got more upside pressure. Look at where this momentum indicator is. It's sitting right at the 0 line. This tells us we have a likely range from a daily perspective. Let's go to the YM. Let's take a look at the monthly. Selling off a little bit, right? Almost retraced the entire month of November, right? Not really what we would call a Santa rally, but here's the thing. Above 43,040, we're going to have more buyers say, you know what? I want to get back up here into the 43.66. Dips are buy zones. Momentum looks very strong, but the dips could be deeper as price action is rotating into the heavy congestion zones. Let's take a look at the daily. Here's what we're looking at. Whoopsie. Here's what we're looking at, right? A double topping formation. Notice a higher high stays there for a while and then breaks down. Here's the beauty. This kind of formation, remember, the market's fractal. And so these higher highs that all of a sudden begin to stall out really do give us a space where we say, you know, if I close a day underneath my old resistance, I've got myself a short. Now, look at how many days it takes. If you're looking at a 5-minute chart, it'll take that many candles also. Don't be so fixated on trying to find the bottom or trying to find the top as getting on the right side of the trade. That's going to be where you make significant money over the longer term. Now, let's take a look at what's happening here. We're under the VWAP. We are underneath the hull and we're underneath the exponential moving average that we look at. So what are we staring down? We're looking for support. Should buyers come in here? Well, yeah, they should. They should try to come in here. Momentum is definitely weaker. So we have to give them a chance, the buyers, to see what they want to do here. Otherwise, we fall into the VWAP and the point, okay, the VWAP's lower, sorry, the point of control here at 42,400. What do I think? The bounces are going to give us sell zones. If we can bounce into 470 and 43,760, excuse me, and we fail, we've got ourselves a short. Now notice, it could stop right here at 43,410 because that's the new area of heavy congestion that got broken. It's also the close of Friday's VWAP. So we got to be super careful there. I believe this is headed down into this area that's got the point of control attached to it. And that's where most of the traders have agreed on price. As you know, point of control can get very choppy. So trade into the number versus opening a trade at the number unless you see clear evidence that price action is moving to the north. I don't trade the diamonds. Their options are too thin. And so we'll just go right to oil. Here's oil on the monthly. Now, I just put out a formation in the Benzinga Pro platform and on the Top Step Discord that talked about what I see happening here. So a couple of things. We could easily hold this floor at around 66.75. And as long as we hold that 66.75, we are going to have ourselves a break to the north that could take us all the way back up to 82. Okay? Now, this is the monthly chart. Doesn't look nearly as clean as the weekly chart that's saying, hey, listen, I've got a bottoming formation. I'm trying to hold. If I don't hold this 69.50-ish area, I'm going to head back down to 66 and potentially into 59/55. Could it hold? Yes, it absolutely could. You can see buyers coming in right here. This is the volume point of control, and it could head easily right back up into 78. That is my thought there with oil. My thought is that this thing is trying to base, and these low, low, low really trying to push off the top. When will we know that this has got upside pressure? Well, we won't know until it breaks out. But if we've got support of all of our moving averages and our momentum is turning up, we pretty much can see, hey, listen, if I can find a dip down here at 68.50, I've got myself 68.80, I've got myself a pressure event that could be very lucrative in the longer run. Okay? Really big. We got to watch oil very, very well. Okay, let's take a look at gold. Week before last, I said 2,700, once it breaks, it's going to become resistance. We got to 2,750, and it broke down through 27, collapsed straight through it. Now we are at a very important edge. Notice, this number is really 2620, I think, but it loses the zone, heads into 25.85 and begins to bounce. What do I think is going to happen to gold? I think gold fades. But notice how sharply it moves once it gets into an area of frontline support. If we can't hold 25.50, chances are we're headed to 23.13. Okay? Now, if we can hold 25.50, we're going to stay sideways. But we do know this. When we walk the band on a Keltner channel, just like you might on a Bollinger Band, when we've walked it for a long time, we normally revert to the middle of the band. We do. It's just the ebb and flow of trading. Now, if we take a look at see what I mean about that? Let's go straight to the daily. What we can see is that we're in a little bit of a mosh pit, right? 26.15, great support area, but see this momentum? See how it's just pegged down here? It's telling us that our big bounces are selling pressure events at this particular juncture. Now, where could the big bounce be? 26.70, 2,700, right? 26.50 to 26.30 really looks like the resistance zone. It's caught in a little bit of a bog, but this lower low that catches the bid tells us potentially that we could be headed to the 25.50 and indeed to the low volume pocket at around 2,500 before we catch speed again. All right, that's it for me. I will see many of us on the Benzinga platform at the Midday Moneyball Report. See what I mean about this kind of price action that says, hey, listen, we are dipping, but buyers are going to try and toe the line. All right, we're here at value area low. It's a pretty fair place to take a long, but only into resistance because we've started walking the band. All right, we are underneath this band event, and it could extend lower, especially into the open of the day. And we've got, I don't know what time it is over there. It's 2:18 in the afternoon here. I think it's 6 hours before. So what is it, 8? Something like that? 8 and 4? Yeah, something like that. All right, so we'll see what happens here. Don't short here at the open. Let the inventory correct into old resistance before you do it. All right, folks, I'll see you soon. Take care.